Welcome to the model of ninth wave. Superior inventions for financial markets using 369 forecasting research and development.
Hello and welcome to this quick presentation on staying with the trend, finding the trend, and taking the trend biased positions. We are going to use GANN grid for that demonstration. So the idea is pretty simple. We will take the prior swing and we are going to place the GANN 4x4 grid at the high-low position of the prior swing. What is a prior swing? If I'm projecting a downtrend, then I should take the up swing from the, which I will explain once you see it. So if I want to project the downward sloping trend description, and as long as the price is below this, I'm only taking shorts, which means I need to use the prior upswing to project the down trend swing. So this is how you're going to place grid here, but grid has 4x4 structure. So which structure are you going to place here? So we are saying place the 25%. That means the first column should curve fit this high and low, which I will show. And then we are going to pass the beams, as we have shown earlier, from the grid this time. From this grid to 25% slope. So that way we are going to stay in the trend as long as possible. So now these rules are not going to change for any instrument. We just picked up this AMD. First of all, let us rejoice in the idea which I have mentioned several times. This is the one of the 99 models for the institutions based on value, based on algos, targets. But I also mentioned that these green fat lines are there as targets. As you can see, this is not a precise science because this is 70% of the time you will get those reversal. So if you just watch this quickly, I'll just go through this green level, right? Green level, this again back to green level, this is this green level also, same. And then green level, it did not get to the green level, but we get green level, right? Green level, green level, green level, green level, green. All right. This is green, 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 and that's not the tick. We're not dealing with the tick technology here. We have different models for those, right? So this is great for, you have to give some room for stocks to volume to and momentum to die out, right? So green level, I haven't marked anything like this. Green level, right? Green level. So the point is, any instrument you pick and apply the model, futures, stocks, the validity of the model depends on, it should not be curve fitted to a given condition. It should be flexible enough and it should automatically be self-adapting to the market condition. That's what it does. It looks at the data and this is how it projects next day after the market closes, and it takes care of volatility, and the ranges are expanding automatically based on that, right? So it's all, this is why this is very solid, right? Okay, so now we're gonna use this model to trade, but we're going to use something else which I just explained. All right, so when market is in this direction, we have to use this swing, high and low, because this is opposite of where we are trying to project and stay in the trend. If market is going down, we want to see if we can stay and only take shorts only. That means we are projecting the downward trend and staying with the trend. For that, I need to take the previous projection of high to low. Alright, so I think it's clear. So let's do maybe if I'm going to check the downtrend, I need to use the previous swings. And if you don't know how to get those swings, we can always use this zigzag points or percentage. So let's make the points. Now this is going to be different. $5 retracement is pretty. Let's do 1 by 1 and see how it looks like first, and make it a little bit fatter so we can just see it, and we can adjust it. So this is giving us mathematically correct aligned swings. If you have seen my previous video how we can use ABC targets, also this is I think one good way of doing those things if you are into Fibonacci. So for example, ABC, ABC, ABC. Now this has a lot of structures. We can use this to time the market also. Again, I don't want to distract from what we are here to do. So for example, A, B and C. Now you're getting a hit at 100%, at 161%, and whatever ratios you want. So that is how we can also validate our swing has been correctly identified. If not, what we can do also is go and change it to 2, 1.5, 1.25, 1 point this, 1 point that, right? And then maybe go ratio 0.75. So once you test few things, validate through Fibonacci ABCs, then we know, okay, we got the right swing structure. And that is only required if you want really to be mathematically correct. Now this is also a swing 1, 2, 3, 4, 5. There are 9 waves. Actually, they're not 5 waves or 7 waves. They're 9 waves. That's a different science. But you got the idea. What the first point says. I hope it is pretty clear. Okay. Now it says second point, place the GANN grid to that high low. Okay. This is the high low. This is also high low, right? So okay, let's place it. So the first point is clear, and we need some help. We take this helper, zigzag, and we got our measurements. We tested some measurements, ABC, ABC, and it's okay. Maybe what we picked up, the swings are correct. Alright, so now we get all the pivots. Now the GANN grid looks like this. It's in every thing, right? It's just nothing more than fracturing the range in 25% of time and 25% ranges of price. But double click this, you can add more ranges too. If you have some other breakdown, you can do 1/8 also, or 4 by 4 is fine. Quarter points, right? The whole story is based on quarter point. Then it says go and place this on high to low. Okay, so let's place it on this high. And it says, what did it say? Let's go and read again. It says, map the swing to 25% in time range. Now this is a time range, right? 25, 50, 75, 100. So let's curve it from high to low, the 25% range. That's what it means. Maybe I can make it fatter. Okay. Okay. So that should be enough, I guess, for now, for what I'm trying to explain. So this is a 25% range in time and it has been curve fitted into this. Then it says beam. Back to the beams, right? Draw beams from pivot to 25% time and price range. This is my pivot, and this is the 25% from the top, the price, right? And then from here, so let me draw this. So basically what it is saying is we want to stay, if you want a lower slope, if you want to have, if I put it here aggressively, then you can say that, it's not correct. Do you agree? So that's why we want to, if you want a slow slope, let the trend build and develop, give it some time, and this is where we can do it. So this is the possibility, what we are saying. If market is really going down very hard from here, I'm going to the edge, last part, and then we can also do it right here. As you can see, that is okay. And then we also have this edge. We got to beam it. So we are going to use the initial box, just like what I showed you, and stay. If you want to stay in a longer swings, longer time frame, you have to decrease the slope, the angle here. If you get the angles more aggressive, you already understand what I'm trying to say, right? So these are the opportunities. All right. So let's say we make a decision, and obviously you will go back last 3, 4, 5 years and play with this for the instrument you are going to trade, and then you will say, okay, I will stick with this method, for this stock, that I will keep taking the short bias only until it breaks, and then I will do this, or I will go to the second aggressive one if you want. Where is the second aggressive one? Which is right here, right? Because the big players don't do too much the way retails do, right? So because they have a percentage targets, 2% a month, 3% a month, and this is how the profit lines are derived in the market. Okay, I think it gives you enough evidence to go and practice, and for a specific scenarios. We also gave you other beam lines, right, for shorter ones. All right, so now we have this, and we pick this, and we say we will continue to take shorts only until this breaks 91 or higher, and it stays there. Then we will do the opposite beams, and we will continue to go in the trend direction. So last almost, what is this, 322, almost a month, right? It has been in a downtrend, and this line has not been broken, and it is sloping and sloping and sloping. This way, without even having to have a squared charts, you can come close to doing what I just showed you. There's nobody stopping you doing this 2 lines either. All right, so now we have a structure. Now this is one of the definitions. We also have a definition on the VWAP trend. You can watch those videos. This is another approach to staying in the trend. Now the second part is we're going to trade in the direction of the trend, which means I'm going to only trade shorts. That means I will smack down all the rallies. Okay, and which also means I will know my downward targets, which we have done many times. Let's do it again. Let's do it again. This is poor man's approach, which we have covered many times, to find the targets. From the pivots to pivots to pivots, where we are going, right? Now this is not 100%, nothing is, but you got the idea, right? Where we're heading. Again, these are the impulses. So in the direction of the trend, the downward trend, the impulses on the downside will be much elongated, and the reactions will be half the size, 60% of the size. This is where all the Fibonacci ratios come into picture. If this is 100%, this is 60%. This is 100%, this is 78%. This is 100%, this is probably 89%, right? This is how the ratios are unfolding. But they're folding on the line, the trend line we have captured. From here to here, this is probably 38% retracement, or maybe 50% retracement, right? Look at this range. This range, let me put that on, since we are on it.